Hello, welcome to the European Open briefing for Wednesday, March the 22nd. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we have quite a bit of risk aversion this morning. We had quite a big drop in US shares yesterday, and that led to a sell-off in equities across Asia this morning. European shares also fell sharply yesterday. The dollar is trading near 4-month lows against the yen, and this risk aversion is mainly on fading expectations that there will be a tax cut in the US this year, and even if once the tax plans are ready, whether or not they would actually get approved by Congress. So all of this has led to a rise in risk off in global markets, and that's hit commodity currencies as well, such as the Australian dollar, but the euro and the pound, on the other hand, are doing rather well this morning, extending yesterday's gains mainly due to political developments for the euro and economic data for the pound. But let's begin with the dollar. Here we have the dollar index in the chart. It's currently trading at 6-week lows around 99.75. The dollar has continued to come under pressure since the Fed's decision last week to raise rates, as that hike had already been priced in, and there were hopes that the Fed would signal potentially 4 rate increases in 2017, but FOMC members stuck to their projection of 3 hikes, and Fed speakers since then. We had a couple yesterday. We had the Dallas Fed President Robert Kaplan speaking. He said that 3 rate increases would be reasonable, and he's looking for a persistent upward trend in order to justify a more aggressive rate hike path. The non-voting member, FOMC member Loretta Mester, who's already known to be rather hawkish, she didn't sway away from that. She said she expects rates to go up more than 3 times, although being non-voting member, that didn't have much of an impact. Looking now at the S&P 500, we had a big drop yesterday of over 1%. That was the largest drop since the US election, and that's mainly due to worries by investors that Trump's promised tax reforms won't go ahead this year, or even if they do, they'll be too late to have any impact at all this year. So that's led to a bit of a sell-off. Currently, the Congress is debating healthcare reforms, and that can be viewed as a bit of a test for Republicans. If it gets approved easily, then it would raise expectations that the tax plans would also have more success in getting through Congress. On the other hand, if the Republicans fail to get through the healthcare reform, then that would be negative for the markets to an extent as well. And all of this risk-off has sent gold prices to 3-week highs this morning of around $1,249 an ounce. We had some Japanese data earlier today. Japanese exports rose by more than expected 11.3% in February at an annual rate. Expectations were for 10.6%. Imports also rose faster than expected. And we can see dollar yen, it fell below the key 112 level yesterday. Although the Japanese data doesn't really have much of an impact, it's mainly due to dollar moves, the dollar-yen pair. But nevertheless, the Japanese data did provide potentially some support this morning. We also had the Bank of Japan's meeting minutes of the January policy meeting, where there was some discussion over whether to raise the Bank of Japan's yield curve target to more than the current level of 0%. But for now, it appears that most members agree that it is premature to talk about raising the yield curve target, given that inflation is still far off its 2% target. In European currencies, the euro and the pound have been doing rather nicely this week. The euro is boosted by, we had that TV debate on Monday, where Macron was seen as the main winner, and fresh polls out yesterday show that Macron has gained a lead over Marine Le Pen in the first round. He's currently at 26% versus 24.5% for Le Pen, and in the second round, of course, Macron has already been in the lead. So there is renewed optimism that perhaps Le Pen won't do as well as had been feared, and that would be positive for the euro and in Europe overall as well. The euro hit a 7-week high yesterday at 1.0818. The pound, on the other hand, is at a 3.5-week high of just about $1.25. We had much stronger than expected UK inflation data yesterday, where annual CPI rose to 2.3%. That's the highest in 3.5 years, and that's added to expectations that the Bank of England may begin to raise interest rates at some point in 2017 rather than 2018, as was previous market expectations. In commodities, the risk aversion has hit the price of metals such as copper and iron ore, and that in turn has had a negative impact on the Australian dollar. The Australian dollar had a very strong start yesterday. It hit a 4-month high. It's since tumbled to near 1-week lows, currently trading at 0.7647. So despite the weaker US dollar, the Australian dollar for now is being negatively impacted by what's happening with commodity prices. And finally, let's have a look at today's economic calendar. We can see the Japanese data there. It's looking very quiet in the European session. We only have Eurozone current account numbers coming up. And in the US session, the only major data will be the existing home sales later on. But also at later in the US session and at the start of Asian session, we're going to have the Reserve Bank of New Zealand's policy meeting, where they're expected to hold rates at 1.75%. That's it from me. Thank you very much for watching, and have a great day.